Hello, everyone. Welcome to the weekly tax update, episode 85 for December 8th, 2023. Thank you again for joining us. I'm sure by now you know who I am. A few reminders before we kick off. We had Hector Garcia on last week for Tax Office AI, Rise of the Machines. Marvelous program on both the basics of ChatGPT and then some basic integration into tax and accounting practices. If you're a subscriber, it's on demand at no cost. If you're not a subscriber, by all means, feel free to purchase it and watch it, but it's available in the on-demand section of the website. My ethics program from Giving Tuesday is also available on demand. If you still need your IRS ethics, this is a free program to all of our practitioner colleagues. If you know friends or anybody looking for it, share the link. Happy to have them take the program. Turned out to be our most popular program of the year, which is always a good feeling. People come and see you if it's free. But seriously, if you need ethics, people that need ethics, have them take the program. We ask kindly that you complete it by December 29th, so we're not sitting there at 11:30 on the 31st. F5. Anybody else? F5. If you're not a subscriber, please consider becoming one. All of these things that we mentioned are included in $52 per month as a fee for becoming a subscriber with us. If you are not if you're not an EA CPA attorney, you can still qualify for the AFSP designation by taking the annual federal tax refresher. That's available again at no additional cost if you're a subscriber here. An additional benefit or an additional thought someone mentioned to me the other day is they use the after exam to test basic competency of new employees. And that's quite interesting. You just have them take the after whether they want it or not, and you see what the result is when they take that exam. So it's a very interesting idea that we're going to explore for next year. We ask the same thing. Please complete the exam by December 29th. If you're a subscriber, email Nicole. She'll get you the textbook. You'll be all set to go ahead and take the program. IRS has several free upcoming webinars. 1099K webinar on December 14th, professional responsibility and tax practice on December 19th. I'm going to talk a little bit more about that in another slide. They have a due diligence webinar on frequently asked questions on due diligence in January. And then sailing through the rules of refundable tax credits is January 12th. That appears to be the child-related refundable tax credits, maybe worth a review. So the webinar I mentioned the IRS is doing on Circular 230, professional responsibility. I believe this will qualify for ethics. They don't specifically mention that it does, but in that program, there's an introduction to Circular 230, but there's a focus here on remote work. This is what attracts me to this, is to hear IRS employees talking about this, right? Technology, AI tools, remote work. Competency together with AI tools is an interesting area to explore. How does the use of an AI mitigate the requirements under Circular 230, Section 10.35? I doubt they'll get that far into the weeds, but I'm going to watch the program. It should be an interesting watch. So as a reminder, you need to renew your PTIN. You need to do this by the end of the year. Although I know people who have done it after the first of the year, no penalty, they still renew it. But don't do a tax return without your PTIN being renewed. It took me, IRS says 15 minutes. It took me about 3. And I think it took 3 because it doesn't take American Express. And I had to get a bank check to key in the information. As you know, anybody who prepares a return, helps to prepare a return, is supposed to have a PTIN. The current PTINs expire at the end of this year. $19.75 for the fee. That's just the cost of the outside vendor for processing this. The non-refundable fee, is $19.75. It's faster to do it online, although you can mail it in, and I give you right there if you want to, where you have to go to take care of it. Henry asks in the chat, John, did you see the appellate ruling on Zelensky's latest New York lawsuit? Is that the guy that sued over whether a deli platter as opposed to a sandwich is subject to sales tax? He lost. The deli platter is like a sandwich. It's subject to sales tax in New York. EA renewals, if you end in 789 or don't have a social security number, if you're an international practitioner, you are required to renew now. So you can renew at Pay.gov by completing Form 8554. You believe it or not, on the Pay.gov website, you'll answer the questions and fill in your information about how many credits you took each of the 3 years. So please take care of that. Don't get caught being non-renewed. Shutdown for business e-file was announced. I'm highlighting 2 points here. The shutdown for sending submissions begins at 11:59 a.m. on December 26th. Now, don't laugh, but as a guy who was transmitting returns this year on November 16th, trying to get some out, we had one return that at 11:45 missed the cutoff, although his California return went through because California e-file is open. So you can then download any acts until 11:59 p.m., at which point the system is unavailable until they reopen. Just a couple of quick thoughts there, right? The AM versus PM. My guess is, depending on your vendor, you will have very little access on December 26th to send returns. So a couple of things we're going to mention this week are under the in case your client asks. Some of them are not laws. Billionaire income tax bill has been proposed. It is not a law. It is not passed anywhere. I thought this is important because your clients may ask you about it. Elizabeth Warren and Ron Wyden, right, leaders in the Democratic Party, and 14 other Democratic senators have co-sponsored this bill. I didn't see if Bernie's name is on there or not, but it targets people with $1 billion in assets or $100 million of income for 3 consecutive years. I don't know how they know if you have $1 billion or more in assets. They're going to certify you? Are they going to go to the Forbes list? The $100 million in income is easy, provided they define income. So, with respect to assets that are tradable, think stocks, bonds, securities. They're going to mark those to market in valuation. So somebody like Jeff Bezos, right? His wealth goes up $14 billion. He's going to get a tax bill for it. You can argue whether that's fair or not. Taxpayers are going to pay a gain on taxes or claim a deduction annually for losses, irrespective of whether they sold the asset or not. We're going to mark up or mark down the price of their balance sheet, if you will. Losses, they're going to be able to carry them back for up to 3 years under certain conditions. So the mark-to-market rule does not appear that it would follow the normal capital gain losses or carryback rules, right? You're going to be netting and you're going to be carrying them back. Non-tradable assets, like my house, upon sale, the usual taxes apply, but there could be a deferral recapture amount similar to interest on the deferral while I'm holding it. All very interesting how this is going to work out and how they're going to identify people. Again, just in case your clients ask. Democrats are focusing on why there's increased IRS enforcement on the wealthy. They're focusing on it. And part of this is the deal cut with the Inflation Reduction Act was that we wouldn't increase the percentage of audits, the number of audits, on people earning above $400,000 a year. That is the federal government's current definition of wealthy. Of course, they have it. They don't understand. We talk about income isn't wealth, right? This goes back to the Obama administration when they started saying this. So this is going to follow the IRA funding. Senate Finance Committee, Senate Budget Committee are conducting hearings. The focus on them is how high-income individuals legally and illegally avoid taxes. So Ron Wyden, 6 other Democratic senators are involved. And again, they're proposing now legislation that would end the carried interest tax break for investment fund managers. Carried interest, think of it as my investment partnership has a company we control. It's a portfolio asset. Payments out of that for management are treated like long-term capital gains. Sometimes they call this a loophole. I don't think it's a loophole. It's specifically designed this way. They're looking to close that up. So Watch for that. Watch for some Wall Street. Um, um, what's the word I would like to use? Watch for some folks in Wall Street spending some money to mitigate that. We already spoke about the 1099K reporting threshold change. So we're delaying the $600 threshold for 2023. We want to avoid confusion. We're going to talk about that a little bit more in a minute. Word I was looking for was lobbying, by the way. You'll expect to see Wall Street lobbying. We're looking to avoid confusion. I'm going to show you a General Accountability Office study where they think that the 1099K threshold is going to confuse people. And we're going to transition this year. People who got over $20,000 in 200 transactions will still receive their 1099K. For the phase-in, we're going to have a $5,000 amount this year, gradual implementation towards getting down to that $600. There's going to be some update to Form 1040 for 2024 to simplify reporting. We'll see what that entails. Mostly, there's been positive responses from Congress and other stakeholder groups about doing this as a phase-in. There's an entity coalition for 1099K fairness. No idea who that is, but they're in favor of it. Sherrod Brown thinks this is positive for small businesses, reducing red tape. That's right. I have so many clients that have no idea what their sales are without their 1099. So not giving them this 1099K means they don't need to file, right? Because they don't have to worry about their income. House Ways and Means Committee Chairman Jason Smith questions the IRS's authority to create the $5,000 threshold in 2024. He is probably right, but where was he last year when Treasury Secretary Janet Yellen said, yeah, we're not going to do that $600 thing. We're going to keep it at $20,000 last year. So where were they then? We didn't have a program last week. We would have talked a little bit about Tax Security Awareness Week, but the Internal Revenue Service, state tax agencies, and the tax industry in general all get together here. They have that security summit. The idea of the week is to provide educational tips to both taxpayers and us, focus on avoiding scams and protecting our clients' sensitive information. The emphasis was on written security plans for tax pros. I'm sure you saw that. Strategies to respond to data breaches effectively, efficiently, and what you're supposed to do, not even a strategy, what you're legally required to do. They want to encourage the use of IP pins to avoid fraud. Talk about something that confuses people. Number 2 or 3 biggest problem here is people with IP pins that just don't understand how they have one or what to do with it. I want to ask you, though, how's your WISP doing? If you don't have a WISP in place, we have a free program done by Bill Nemeth. Whether you're a subscriber or not, go watch Mr. Bill's program. Comes with all the necessary templates. I know there's places out there that are charging a lot of money to help you put these things together. In many cases, if you have a large firm, you might need professional help. But if you're a small sole practitioner, I think you can handle the WISP and the checklist on your own because, quite frankly, you know what you're supposed to do and you know what you are or are not doing. IRS Union would like a telethon, and I think that's outrageous based on all the Inflation Reduction Act money they have. No, they're advocating for more telework. Their union's the National Treasury Employees Union, and Doreen Greenwald advocates that there should be more telework opportunities. She has said that the IRS has improved its technology, mostly true story, and they are already aligning their work processes with digital advancements. Commissioner Reddick, who seems like he was just appointed yesterday, had said that the IRS's number one problem is paper, and they need to get away from it. Janet Yellen has been an advocate of getting as many of these services onto electronic delivery, electronic interaction as possible. And they're not necessarily looking at what are the big cost items. They're looking at the things that a lot of people use because that'll cut down on phone calls and speed up service time. All right. So President Greenwald talked about the IRS's move towards a paperless system. The IRS paperless initiative was announced last August, and the idea is to enable submissions of all correspondence, non-tax forms, and responses online by 2024. It's a pretty aggressive schedule. They think the impact here on telework means that it's more feasible. I don't have to take home a bunch of case files, right? I mean, who are they kidding? They already have auditors working from home. The IRS has said that IRS management has said their willingness to explore telework, and they want to focus on identifying where the work is most applicable and effective. And there are probably things that can be done at home. I didn't mention this in a previous program, so I thought I would mention it now. We haven't heard a great deal about a threat of a shutdown recently. Why? Because the week of November 16th, they passed a continuing resolution in 4 separate bills that got us until January 19th. And then they had 8 other bills that get us to February 2nd. I mean, at this rate, they're going to get the 2023-24 budget done in time to start talking about the 24-25 budget. The House left on Wednesday before Thanksgiving, and nothing else could move forward because they weren't here. Republican senators want information from the IRS on the data security timeline. So this is that Mike Crapo guy. What a terrible name. He wrote a letter to Danny Werfel. I don't think I put that in the handouts. I apologize. And they're requesting detailed information on steps the IRS has taken to secure its data. They're following up the IRS contractor leaking data documents of wealthy Americans. Remember, who did the contractor leak it to? He leaked it to ProPublica. So that's how we know that, like, Warren Buffett has $100 million in his IRA, and that the guy that founded PayPal, Peter Thiel, has $5 billion in his self-directed Roth IRA. You heard that right, $5 billion with a B. So yeah, they want to shut that down because we might laugh about how much money some of these guys have managed to save, right? So they want to know the timeline for the actions on recommendations that other government agencies take to GAO. They all came in, did audits, and they made recommendations for the IRS to follow. So the IRS has said, we're working on it. And they said, we got cash now, so we're going to take care of that for you. The Senate Democrats have moved to end carried interest. I previously mentioned this from another news item earlier today, but they originally were trying to tie it into defunding the Inflation Reduction Act, and Kristen Sinema, right, wanted that removed. There's a proposed change for educational expenses brought on by Randy Feenstra and Danny Davis. When you don't know who these guys are and you never heard of their name, you always wonder where these things are going to go. And my apologies if these are your elected representatives. Their key proposal here is they want to increase the tax-free amount employers can contribute to an employee's educational expense. Current limit $5,250. They want to crank that up to $12,000. And this will allow them to cover a broader range of education and training types. How about increasing the American Opportunity Tax Credit? Just a thought. This is also backed by a number of other folks, and it's endorsed by the usual typical education organizations. File this under in case your clients ask, in case your business clients ask. We know from previous legislation at the federal level, or attempted legislation, the federal government would greatly like there to be an automatic opt-in for retirement plans. If your employee doesn't want to participate, they have to consciously opt out. We're going to sign everybody up. Studies have already shown people don't bother to opt out. So does that say they can't be bothered to do anything at all, or did they just never get around to registering? So this is increased. This is going to help increase the number of people who sign up. So this modifies ERISA and lowers the threshold from 21 to allow younger workers to have access to defined contribution plans, right? 401k plans. Delays mandatory audits for employers, including employees under 21. This is part of, we said, Congress's broader effort to get more people to have voluntary retirement versus relying on Social Security. IRSAC, IRS Advisory Council's 2023 report is out. No surprises here. They have some key recommendations, one of which was streamlining the process for getting EINs in compliance with the Corporate Transparency Act, enhancing 1099-K reporting, and some self-correction guidance for employee plans. The IRS has its 2023 financial report out, and it shows what their position is, what they've done, where money came from. Couple of interesting points on it. They're very proud of their $659 billion in refunds and that they collected $4.7 trillion. Well, hello, they're the Treasury. Of course, they're supposed to collect money. Right? Couple of interesting takeaways here, though, too. 52,000 people looking for a job stopped by to visit with the IRS. They had 48 separate in-person events to hire people at their call sites and other places. 13,526 people were tentatively offered jobs. Now, we know from previous reports, a large percentage of these folks, maybe up as many as half, either say you pay how much and don't accept the offer, or once they accept the offer, they fail the background check or some other item that gets looked at, such as their taxes. Comments here for me. What will alleviate calls and backlogs to keep transcripts up to date? Actually, I think the larger thing about getting transcripts up to date at the IRS is technology. They just have only so much computing space, and things just can't get done as quickly as we'd like. It makes no sense. We can only e-file 3 years worth of returns when they have a 6-year enforcement period. We should be able to e-file 6 years worth of returns. It makes no sense they need to turn e-file off to do testing and update the system, right? They should have more computing power. They don't, right? All right. So Treasury Inspector General released a report on the 2023 filing season. I gave you an early look at this a couple weeks ago, but IRS's business rules accuracy, 25 of 26 things are being done correctly. E-file, no significant issues. Call center performance, 9.7 million calls answered by automation. 9 million calls answered by assisters. That's pretty good. Average answer speed, 4 minutes. I would like to know what that phone number is to get a 4-minute call. I pay for call and queue, and I barely have a 4-minute average answer time. Some of the challenges and recommendations that came out of the TIGTA report. So IRS met Treasury's expectations. Their level of service is 85.2%. They go through how they get to that number and what it means. I won't spend the time with you. The reduced average wait time down to 3 minutes. You saw half their calls went to automation, right? How much is my balance? What's my mailing address? Some of the identified areas for improvement. One phone number that they tested. Now, remember, they're doing an audit. They don't test every number. The IRS has so many phone numbers. Auditor says a reasonable number to check is 5, 10, 20. Not all the numbers. They found one phone line with an incorrect number. I'm sure that person that's getting the phone call is very unhappy, right? Inconsistent options for English and Spanish recorded messages. I'll give the IRS a lot of credit, though. They are really trying to get there with respect to foreign language. Varied provision of scam alert information went on hold. I don't know what they want to see there. Do they want to see more scams? They want to give callers better ideas for defrauding the government? I don't know. They still have long hold times that exceed 30 minutes in some cases. Well, we know that, but that was mitigated through the callback system. Return calls from lines offering message leaving options. Yeah, that's a problem too. We sit there and watch and make sure if it looks like a callback from the IRS that we grab it. Inadequate staffing is impacting service levels. Nothing new there. They want them to reconsider the number of available lines to ensure acceptable service. Well, we know you've got to have If I've got 1,000,000 lines, I better have 1,000,000 people to answer the phone, whatever the calculus is. I got someone the other day, and it was kind of funny. You always know that they're new when their number starts with a 1004. And some of her questions, you could tell she was new. And when I was giving her my SOR box, which is my first initial and my last name, she asked me, "Is that capital or minor letters?" And I didn't miss a beat. And I said, "It's all capital letters." And I thought to myself, is this somebody working in the new Puerto Rico Service Center? Is it somebody that's just not a native English speaker? The call went through. I got what I wanted. She put it into the SOR. She was very polite. It's just interesting when you hear things like that. So they have people coming online. They're doing a better job. We may or may not have talked about this. The age of tax return processing inventory. So as of last May, when they had 445,000 returns sitting in error resolution, 43% of them were over 5 days old. In their 700,000 rejects, 12% were over 60 days old. Now, it's not clear whose fault that is that the IRS's fault, or are we waiting on taxpayers? Unpostables are a problem. These are returns. Let's say you file an S Corp return and you aren't an S Corp, right? They got a return from you. It's all ready to go, but it doesn't make sense. They can't post it. 30% of those were between 3 and 15 weeks. They're sitting too long. Amended returns that were worked, they had 1,000,000 returns and 91% of them took more than 30 days. Well, to be fair, they used to tell us 12 to 16 weeks. Since the pandemic, they've been telling us more than 20 weeks. A lot of them get processed more quickly than that. All right. Criminal Investigation Unit's new cyber crime data hub. Now, we had talked about this in some of the crypto classes I did in 2020, 2021, that they were putting together this center and they were going to have one place where all the digital anything was going to get worked, and where CID and other government agencies could share this deep database, this deep warehouse of data the IRS was collecting. So it's here. It's coming. So they're going to introduce body-wearing cameras for special agent law enforcement officers. So there's 2,200, right, special agents that carry guns. They're also all going to have body cameras. And this is going to help enhance transparency. That'll be very interesting. I'll do a FOIA request, right, for the day you came to visit me, man. Send me your camera footage. We're going to work with Canada, Australia, the Netherlands, the United Kingdom, and other countries that house money launderers and drug kingpins, right? We're looking at crypto cases, right? Looking to strengthen the IRS's ability to collect, to find money. And if you remember Operation Hidden Treasure, right? The IRS, we can joke about the cases they pick. Mark Dabrowski will tell you that they have 100% conviction rate because they handpick the dozen or so cases they're going to prosecute. Operation Hidden Treasure, they did find a lot of bad people doing human trafficking and a lot of other bad things, and working in cooperation with other international law enforcement places, they put these people out of business. They did it. We actually do a good thing. They did a good thing. So General Accountability Office, the GAO, released a report Wednesday where they feel the $600 threshold on a 1099-K is going to cause confusion among taxpayers. That's right. I got income and I have to report it. I couldn't find the slide, but we have detailed earlier TIG2 reports where we know, absent with any kind of reporting document, like people are 80% compliant with the law. Throw in a reporting document, you get to 91%. Throw in withholding, you get to like 98%, right? Giving people a reason and a requirement to file. It's estimated, though, that 30 million 1099-K forms are going to be sent to the IRS. It's outrageous, right? How much is out there? And of course, they don't send paper, right? It's all uploaded. We know that. The study says that confusion is going to be caused by folks in understanding the taxability of payments. Okay, so if you don't give them a 1099, they're not going to report it at all. Give them the 1099-K. The IRS did some great work on their FAQs, All sorts of scenarios telling you how to do it. It should not be that hard to calculate your profit. They feel that it is. The IRS expects this year to get 44 million 1099Ks because of the reduced threshold. They'll get 14 million more. That's going to be a rolling estimate, of course. We don't know what's going to happen. And they have a lack of a plan to analyze them for enforcement outreach. And we already know, not posted here, but we know from previous take-to reports that they automated underreporter only works 15% of the identified cases. And some of the cases they don't work. It's mind-boggling. Multi-year omissions of income over 3-4 years. Same people, same 1099K, not on the return. IRS doesn't go after these people. So one of the arguments here is, why are we going to give them more work, more data to match? They're not working with the data they have. All right. IRS received more than 5 billion W-2s and other information documents. I'm going to show you a graphic in a minute. And examples of this, W-2s, 1099s. But what I find interesting is the IRS GAO made an error. Venmo doesn't issue 1099s. And this is a great graphic if you're interested from the GAO report. Gives you a breakdown. Here is the most staggering number I've seen. 76% of the reporting documents, 4.1 billion, are 1099B. I just can't believe that. Of all the reporting documents the government gets, 4.1 billion of them are Form 1099B. You're welcome. As you go to sleep, counting that, thinking about that. I won't bore you with this. The IRS has initiatives out. They're going after folks with these fraudulent employee retention credits. IRS management has previously said that most of the ERCs they think that are coming in 3 years later are encouraged by the mills and at a minimum are partially wrong, bordering on fraudulent. And there's now that all the money is out the door, we're back to this higher level of enforcement. So 20,000 disallowance letters went out. And I haven't seen one. I've been asking around. If you get a hold of one, I'd love to see a redacted disallowance letter. And I want to see if there's appeal rights or what's on these things, right? I volunteer to be examined. Can I bring in my stuff and still qualify? We'll see. There's a withdrawal program in place. If you want to pull your claim out, you have to fax in a request. I always worry that faxing is not going to guarantee the government that I prove what day I sent something in, but that's how they would like to receive them. Katie says, but when you look at transcripts, each line of a 1099B is reported separately. Is that why they are the dominant information return? Maybe that's the answer, right? Is that they get 4 billion transactions. But you know something, Katie? I think that's something we could Google, how many stock trades occur in a year on Wall Street. And I bet you it's more than 4 billion, isn't it? I mean, I've got a couple of crypto clients and Tesla shareholders that are over that. Maybe somebody out there will Google that while we're speaking and tell us. But I agree that could be the issue. All right. Voluntary disclosure program is going to come out this month. It's going to if I have a questionable payment, it's going to let me basically pay it back. So the initial review, the initial returns they've audited, large blocks of taxpayers are ineligible. Non-existent employees, a business wasn't existent, lack of employees, or family employees, right? So the moratorium went into effect on September 14th and is effective through, first time we've seen this, at least the end of 2023. What does that mean? Does that mean January 1st they tell us they need 90 more days of moratorium? I don't know. This came up during the week, and I thought I would mention it, so be careful. One of those returns we put through the other day on that got bounced on the last day because e-file shut down earlier than the end of the day. The California returns went through. Why? California's file program hardly ever shuts down. It shuts down like for a day or two during the year. Otherwise, 24/7, you can e-file with California. Good for them. Oh, the Independent Office of Appeals has a focus guide out for 2024. I believe this is in the handouts. If it's not in the handouts, I didn't mention in the handouts, there is a Word document called Resource List. And a lot of these things we talked about, you can click the link on the resource list and get a copy of it for yourself. So as we know, the Independent Office of Appeals, previously Appeals, or also known as the gift shop, is looking to improve taxpayer service in resolving tax disputes. And I must say, a lot of the newer, nicer people at Appeals are nicer, and they do want to resolve a case with you. That doesn't mean they're giving you anything, but they do want to resolve it. All right. They announced their initiatives. I'm not gonna put you to tire with it. I'll put you to sleep with it. But big points. They're looking to enhance communication and access, increase collaboration with practitioners for the appeals workforce education. This is, I think, why Frank is doing more and more programs where he and the IRS Office of Communication, Frank Agostino, are the co-sponsors of these events. They like what he puts out, so that's what they're doing. That'll be interesting to see the more community help with appeals, with doing their education. This came out this week with respect to FBARs. And this was an actual report, not a report, a notice issued by Office of Professional Responsibility. So reminding us about our due diligence requirements when doing FBARs. If we are aware of the non-compliance of someone, we have to tell them about the penalties and the issue. We know that's Circular 230, Section 10.21. We don't have the obligation to prepare FBARs, but we have to tell the client that it's required and they need to do it. That's very interesting, right? It's not a tax form. You don't have to do it, but tell your client about it anyway. Very interesting. I think the Corporate Transparency Act, sadly, is going to go that way. You can find this in OPR Alert 2023-12. And this is just information on doing an FBAR. I don't want to put you to sleep because I've kept you for 40 minutes, which is a supersized edition of the program. I see one Q&A here. Let me pull it up from Ann. I can't think of a way that this won't come across as political, but wondering his thoughts on the recent tax charges against Hunter Biden. Me? Well, there's got to be something there, right? Sadly. The truth is always in the middle. And, both parties are spending too much time going after each other and less time worrying about running our government and solving our problems, right? And if they worked on our problems, the world would be a better place and they could spend weekends fighting with people. So Katie, wonder if the reason we're not required to file an FBAR is it isn't an IRS form, so much as with CTA insurance not covering. Actually, a lot of insurance carriers are on the fence or are covering it, Katie. It's only Travelers that's really come out and said no. So, all right, folks, you should have a lovely weekend. This program will not run next week because Kathy Morgan is doing Business Tax Update from 1 p.m. Eastern to 4 p.m. Eastern. So don't look for this program next week, all right? Thanks, guys. You have a great weekend.